Hey, Mr. Grumpy Gills. When life gets you down, you know what you gotta do?
I don't want to know what you gotta do.
Just keep swimming, just keep swimming, just keep swimming, swimming, swimming. What do? We swim, swim.
Dory, no singing.
Dory. I love to swim in.
Dory.
When you want to swim, you want
See,
to
I'm gonna get stuck now with that song now.
Sorry.
Welcome to Successful Dropout. This podcast is for the outliers, the innovators, the rebels, those that dare to dream and act on their dreams. I'm your host, Kylan Ginger. Join me as we find out what it takes to drop out, grind, and succeed. What's up, fam squad? I've got some pretty exciting news. If you listen to the podcast much, you know we've been building a pretty vibrant community of truly extraordinary people who have committed to an unconventional route through life. The Successful Dropout audience has been growing a lot, and I get a lot of people reaching out to me now with all sorts of questions regarding education, dropping out, opting out, entrepreneurship, resources, networking, etc. So much so that I decided it was time to create a more accessible community on Facebook so that we can all ask and answer these kinds of questions together, as well as celebrate our successes and encourage each other during inevitable adversity. So I've created a closed Facebook group, and I want to invite you to join it. If you follow Successful Dropout, if you resonate with our philosophy and want to help me grow this thriving community, go to successfulDropout.com/group. This community is for the rebels, the outliers, the innovators, the doers, and those who dare to dream and act on their dreams. If you're a dropout, an opt-out, if you're thinking about doing one of those things, if you're a parent, even if you aren't any of those things and you graduated school, I want to invite you to join. All that matters is that you resonate with the Successful Dropout philosophy and that you enter the group with the intention to provide value to the other members and not just receive value yourself. Again, go to successfuldropout.com/group to request admission. Once you're a part of the group, introduce yourself and get involved, and I'll see you there. What is up, Successful Dropouts? Get stoked because today on the show we have Travis Brodin. Travis is the co-founder and CEO of Newchip. And if you guys remember, we've had Ryan Rafols on the show, who is the other co-founder as well. But Travis believes crowdfunding is the future of investing and that millennials will lead the impending economic revolution. Travis has been involved in startups for over 20 years and has consulted over 2,000 startups and more than 100 Fortune 500 companies. More recently, he has helped build the fastest growth private company in Austin, winning the Inc. 500 number 21, where they bootstrapped a company from $1K per month revenue to over $1.2 million per month in less than 14 months. That's incredible. Generating over $40 million in 4 years. Starting his junior year in high school, Travis took evening classes and joined the school's work experiences program in order to qualify for half days. By his senior year, he was only attending 2 high school classes, and at 19, he was already making $150K a year, and at 21, he raised his first $10 million. So, Travis, man, that is the intro I have for you. It's quite the intro, but tell us a little bit more about yourself and what you do.
Yeah, Kylan, thanks. That was fantastic. It's always fun to hear that. So I've been working for about 20 years now. I built a whole career on that. I'm 40 now, so I guess it's a little over 20. But most of my career can be summed up across three tenets: really, the startup life, the Fortune 100 consulting life, and then the bootstrap life. Most of that is really wrapped around kind of awareness to how money moves and where money comes from, I think. And I think if you really look at what defines me, I kind of grew up in that lower middle class, probably upper or lower class type life. And I'm really on that side of that hustler, that American dream, that entrepreneur, trying to, break out. And, crowdfunding, equity crowdfunding, the space we're in now, really is a culmination of all those experiences of my life. Bringing opportunity to entrepreneurs and allowing what we call the everyday American, or some would say the 99%, to invest small amounts of dollars into great companies and go along for that journey on equity rides. So really believe these laws changed, and the world's ready for a new adventure.
Yeah. Right. And Newchip is kind of the mechanism that you're building to facilitate that, I know. And so I want to kind of jump right into that, because I know the majority of people listening are kind of your target demographic for this. Being able to invest in startups. It's an exciting thing that I think it was, prior to 2015 you weren't able to do. And so I'd love you to give a little bit of a background on it. And tell us about Newchip, what it is, and where you guys are headed and how people can get involved.
Yeah, I'll start out by explaining kind of what changed and where the opportunity came from and why it's so powerful, and then kind of what we're doing over here at Newchip. Last May 2016, the laws changed in the United States, and for the first time in about 100 years, the everyday American, or as you can say, the not rich people of America, were given permission to invest in startups. And that is a massive shift, right? 200 million Americans can now be investors, and that literally means you can take some dollars and own a piece of a company, and as it grows and as there's an exit or an opportunity to sell that stake in the company, you can profit from that growth. There's two parts to that really tragedy, or the un-Americanness of that, I think, is that, again, for 100 years, you couldn't, let's say you worked for 10 years of your life, putting a lot of work in, you amassed $20,000. The government said you were not allowed to put that into startups. Sorry. You have to go buy some stocks, go put it in the 401k, but you're not allowed to do what you want with your own money in America. And I really felt that was sort of not just a protection, because I could see how you could perceive that as, well, we're just protecting some people. But I really saw that as a way of keeping people down by not allowing them to invest in what's the most likely to take $100 and turn that. Well, it might be the only way, aside from winning the lottery, that you could take $100 and turn it into, say, $5,000, $10,000, or $100,000. Now, to be clear, not to say that every deal is a winner, right? You're far more likely to lose that $100. But there's very few opportunities in America. Early stage companies will get you 100x return on. It just doesn't happen that often. So certainly not the average stock market anyway. So when the law changed, what came online, well, a lot of people saw this opportunity. In fact, it took 4 years to finally pass. 4 years prior, I was all in on this concept. I said, wow, this is going to change the world. And I sat around waiting for them to take action. And it finally passed. And 4 years later, when it actually passed, I wasn't even paying attention anymore. I'd given up. It was funny because I got, popped up on my news radar about a month after I went live. And I thought, oh, that's pretty neat. I kind of moved on. But hopefully it does some big stuff. Then platforms started popping up. And the platforms are basically the deal makers in this space. There's roughly 100. There's more coming online every week or so. But they're basically the deal makers. And they specialize in niches around the country. And if you're an entrepreneur, you connect with the platform. They like what you're doing. And they set a valuation. They take you to market. Very much like a mini version of putting your stock out there. But what they do is they put you up on their website. They get a little taste of the pie, and they help you set your valuation. But ultimately, they're putting their stamp of approval to say, we've looked at their business plan, we looked at the team, and here's the capital they want to raise. And we're willing to put our name on this to say, yeah, we believe in the team that can actually execute on this promise. And if they do execute, then this company will actually become something. That's really what the platforms are there to do. They're licensed, and they have that obligation to bring good deals to market. The challenge that presents, though, right. So imagine a bunch of Kickstarters. Imagine 200 Kickstarters out there in the world, and you have to go to each Kickstarter every morning to find all the cool stuff. Well, the problem that Newchip solves is, you don't want to go to 200 places. You want to go to one place, and you want to find all the deals that you care about. So what we do at Newchip is basically scoop up all the deal flow across every platform in the entire space. And then we, bring it to you as an investor. We're also going to learn about you and your preferences. And over time, we will know what deals you like and which ones you don't like. And we'll be able to sort all of those deals based on your own personal preferences and sort them back to you to see exactly what you're looking for that day. Very powerful concept, right? And so some people, right away, people would say, oh, well, you're the kayak of equity crowdfunding. And we said, yeah, that's pretty cool. Thank you. Personally, as the CTO, right, I look at it more as a as the Google for startups. If you go to Google right now and you pull up Google and you say, "Hey Google, what should I invest in?" It's not going to answer. But you go to Newchip.
Right.
As soon as you pull it up, we're going to show you the most likely deal that you're going to want to invest in. Now, we can't, guarantee whether that's the right investment for you, but we know based on everything you're looking for and all the data we know about you that here's the deals that you probably want to see this morning. And that's very powerful in itself. And that's, in a nutshell, what we're doing at Newchip. The big vision here, it's much more than something like E-Trade where you go on and do a financial transaction. We are really building a community of people who believe in startups. We're a community of startups themselves. So you've got the investors, the potential investors, as well as the entrepreneurs of all the companies coming together in one place to have a discussion, to create better ideas, to improve on their ideas, to get funding, and to invest in those ideas. The best part about all of this is that from an investor, most of the deals you can get involved in for as little as $100, and you can sign up on Newchip.
Wow.
Sign up on Newchip in as fast as you can type. Say for me, it's like 10 seconds, right? But others maybe 30, 60 seconds, a minute at the most, and you can literally find a deal to invest in, put your $100 in, and within 2 minutes you could actually be an investor in a startup. Very powerful concept, right? You go to E-Trade, it's going to take you 2 weeks to get vetted, transfer your minimum of $2,000 in, and then buy a few stocks that are companies that have already done damage in the world for the most part and had their chance. And you get the picture there. So.
Yeah, I mean, I downloaded and have used the app myself, and yeah, it took me about 30 seconds to sign in, get a profile set up, and then I was swiping startups. It reminded me a lot of like Tinder in a way, just for startups. I mean, it was just like I was amazed, frankly, at how simple it was.
Yeah, we take a concept which is typically very stale and sterile, right, and boring. And look at a prospectus. Look at here this company is in this space and blah blah blah. Buy their stock. Who cares, right? The power of equity crowdfunding is let's hear the story of the entrepreneur. Do I believe in this guy's mission? Is he doing something for the world? Is he a greedy bastard? What is the angle on this guy? And then do I believe in it enough to take a little bit of my money and put $100 in? And it's really not about the power of you putting $10,000 or every dollar that you've saved into a deal. It's taking a little bit of money and then calling up your friends and saying, "Hey, I'm buying into this drone company. I really think it's a great deal. I'd like to see, if you guys want to get in with it, with me on it as well. Let's all come in together and help them raise 10 grand right now." And it's kind of the power of the crowd. You take a little bit of risk to make big things happen. And it's the power of all of you coming together to find things you believe in and put money behind those. And the other side of that is if you see something you don't like, it's a good opportunity to stand up and say, "Hey, this seems really like a bad idea. Let me ask some questions to the entrepreneur," and they have to really publicly answer those questions. And everybody gets to see it, right? And it's kind of this. If you're familiar with the open source movement in software, it's all about transparency. And this is kind of like that open source funding round. So everything's out there: the company's background, the team's background, the questions and answers. All of it's public record. And it's bringing a new higher caliber of startup.
So even the questions and answers with founders or team members of the company, that's all, you can find that on the app or by way of the app?
Yes, through the app, and we're continuing to grow. It's a very early market for us, and we're very early to the game as well. As we go, we will be bringing more formal Q&A sessions, AMAs, and things like that you'd find on Reddit. But for the most part, the questions and answers can be found on the deals themselves right now, and we're going to continue to grow that experience. Meet and greets in person, all kinds of fun things are coming that this type of model allows for.
That's great. Do you guys have any, I don't remember if I asked you before, but do you have any competitors in the space, or are you quite a ways ahead of everybody else? There's
a couple of people in the aggregation space with any emerging market. I think the first people on the scene are usually technologists. I think that's just pretty typical. The problem with technologists by themselves is that they don't really have a strong marketing background. They can see a technical solution by bringing data to one place, but how do you put it in front of people? How do you sell it? How do you engage people with it? And how do you tell that story? And when it comes to storytelling in the, really building a brand, I don't think anybody is even close to what we're doing. We're light years ahead of that. Personally, I've been studying generational dynamics for over 6 years. Most people haven't even heard of the term millennial 2 years ago, right? And we don't like to use that term too much because we're really focused on kind of that whole millennial age group plus sort of the younger Gen X group. But that age range, kind of that 22 to 35-year-old. But I had worked with the number one expert in generational dynamics for about 5 years ago. He wrote a lot of the initial theories on what is a millennial and what does that generation mean. So we kind of have a head start on engaging that younger audience. And it's really important because everybody in the space really focused on accredited users, and that means you're earning over $250,000 a year. You have $2 million in the bank already. Well, that's great. Everybody in the space kind of knows that already. But those guys aren't investing in early stage companies. They're all working together to invest in, big deals like, the Facebooks and the things like that. I can't think of anything specific in the last few weeks, but really it's about this new wave of investors that have unlocked to take smaller risks, but at an aggregate level to kind of move the bar and help support companies their friends are launching or companies their friends believe in or that they believe in themselves. Very powerful concept.
So you've actually done a lot of research into that generation and sort of age group in the process of building the app.
Yeah, not just right. I worked with the number one expert in the world on on these type of values in marketing and sales. Right, this guy's name is Jason Dorsey. He's hired by every major brand in the world to come speak at their events to train their marketing and sales and executives on what it means to sell to a new generation. Right when. And the funny thing is I personally know, and why I'm reluctant to say the word so often is because it's not really an appreciated term in that demographic. But as an industry, that millennials themselves, they have taken over they're the majority generation in the United States, right? So they have the headcount. And what companies are just starting to realize, which is something we knew 5 years ago, is that all of your marketing now needs to change to a new generation if you want to stay relevant. And some companies won't. Right, you're going to see some legacy companies just not able to attract that audience because they've already caused enough damage in the world that this new generation isn't going to believe in them. Right, I'm not going to say anything specifically on the air, but a lot of the legacy beer companies, some car manufacturers, a lot of financial institutions that everybody knows they've done some shady things. That generation, as a trend, right? There's always outliers, but as a trend, will never be a customer of those type of institutions, at least as they stand today. And so a lot of them are saying, okay, we've got to start over. Okay, we've got to start a division. And you see some massive movements. And we've seen that happening for the last few years. But anyway, to kind of jump to the point, millennials are never going to really be an E-Trade customer. They don't really believe in the stock market as it stands today, but they do believe in investing. They do believe in supporting good ideas. And equity crowdfunding is that new vehicle, I believe, that will enable them to make a change, to do it in a much more secure way with a higher caliber of company and kind of play by their own rules all at the same time. And I think, and the last piece of that, if that wasn't enough, come together with their friends to work together to change the world, right? Because it's hard to do it on your own. But if you can get 10 or 20 of your friends to come support an idea, that's extremely powerful.
I wonder if you can think of an example, what were some of the realizations as you talk to this expert and you're coming up with your marketing strategy and how do we build this to really attract millennials? What were some of the things that really surprised you that that you wouldn't have guessed before? Does anything come to mind? Or
well, I think, and I didn't just hire Jason. I actually worked with him full time. I was on his marketing team, and VP in technology and marketing. But the trends I saw were really mind blowing, and these were things that were blowing my mind 5 years ago. Right, a lot of people would say, you actually look him up, Jason Dorsey. He's got some great videos. I recommend everybody pull him up. But one of his jokes is that if you text somebody, if a millennial texts somebody, which is pretty typical, that's a Gen X person like myself, I might not respond, right? And in the millennial world, not responding to text messages, that you actually feel that in your heart, like what's wrong with that guy, right? And it's just our nature to just kind of say, okay, that's cool, thanks for the text message, but not actually take action on that. So, right. I might write you a letter like, hey, how's it going? And find out like you can't read it. So you send me a text message like, I can't read cursive. I don't see your text message because I'm not paying attention. You can't read the letter I wrote you. Right. So it's it's a big mess. The other trends are right, like how you grew up and the world that you grew up in. My generation really built technology in a lot of ways. Like the internet came online, we built it up from the ground, right? Websites and what they became, some of the way to. I mean, I helped build a company that was one of the first shopping carts on the internet. That's how old I am. And so Jason will point out that millennials. A lot of people will say, "Oh, millennials are tech savvy," and that's absolutely wrong. Millennials are absolutely not tech savvy. They're tech dependent, as he says. And the difference is you love technology, but you have no idea how it works in a lot of ways, right? And again, that's a demographic, but some things are changing. The other thing is, a lot of millennial parents went through a 401k crash, economy crash, mortgage crisis, losing homes, a lot of uncertainty, a lot of full-time jobs, a lot of layoffs and things like this. And so rooted in that generation as a whole is this tendency to believe, enjoy your life. Stability is never promised and never something that's desirable. So stay flexible and let's go make the world a better place because it sucks right now.
Yeah. Those are some interesting insights I wouldn't have thought of, but I could definitely see the truth there. If I'd be interested to hear if you had any or were at liberty to say any, since you guys have launched Newchip and kind of started to build the user base up, any success stories or anything like that you could talk about?
Yeah.
Or case studies.
Yeah, there's this guy. Yeah, you wouldn't believe it. I think he's raised. I'll tell the story. So, I met this guy at the largest crowdfunding event. I guess it's been about a year ago. He had basically taken a snowboard, threw 4 wheels around it, and a golf rack, and he created this thing called the golf board, which a lot of people have heard of these days. But at that point, he'd only raised about $30,000. And he said he'd taken to the golf course, and he said, "Hey, I want you guys to, I want you to let me ride this 4-wheel snowboard around the golf course." And they said, "Oh, hell no, you're not going to get on our golf course. This is the dumbest idea we ever heard." And so he tells the story, and I said, "Well, okay, I could see that." And he said, "So what I did instead is I didn't even bring the golf board. I went into the next golf course, and I said, 'Hey guys, what's your what kind of challenges are you facing?'" Which is really a great sales tactic, right? If you've ever been in sales, and start with their problems, not with what you want to sell them. And so they said, "Oh, I'm going to call him Bob. I don't think that's his name, but "Oh, Bob, the problem is we're out of business." And he said, "Why?" Well, he said, "Well, this younger generation hates golf." And he said, "So we just got a report from this guy, Jason, right? And maybe not. But we got this report and it says millennials are never going to be golfers as a demographic. So you might as well, find a new way to use that land." And he said, "Well, what if I got an idea that would attract this younger generation to come out and maybe, reserve some tee times?" "Oh, I'd love to try that." So he brings out these 2 golf boards and basically puts them on tap, and he calls them up like 2 days later. And he said, "This is the greatest thing we've ever done. The tee times are book solid, and we've got this younger generation coming in. They're golfing, but they're having a good time with their friends, cruising around the course as well. The tires are not they're doing less damage than golf carts, and this younger generation is now golfing, but also golf boarding around these golf courses, right?" So anyway, that story comes through, and this guy was trying to raise about $100,000 for his prototypes within, I think it was 2 to 3 months. Don't quote me on the exact numbers, guys. I'm a little rusty. But within 2 to 3 months, the guy raises $6 million on a $100,000 goal, all equity. And these are people that believed in it so much they wanted to own a piece of it. And now it's this massive movement. They're manufacturing them as fast as they can. And I'm confident that you can go ride one of these things. If you just pick up the phone and call maybe one or two golf courses in your area, you could go reserve a tee time, or they'll have one coming soon that you'll be able to go ride on your own golf board. And so, right, that's crazy. To me, that's crazy. You're looking for $100,000, you get $6 million, and it's all in, right? You don't keep giving equity. It's not like they bought his company from him for that. They actually just kept investing at that same valuation, at that same percentage, and the valuation just kept going up. So more money people put in, just the valuation increased, but the percentage stake stayed the same, which is amazing.
Wow.
I don't know. I'm really excited about that one to see. So if he said he spent like 5 years trying to, raise capital on his own, and nobody believed in it. But you get it in front of people who actually can see an idea and get behind it and see the real value of it. Right? A VC would never put money into a golf board and say, "Oh, this market doesn't exist." But when the market itself says, "Hell yes, we want to ride that thing. Hell yes, we want to own a piece of this, and yes, we believe in it," the market sort of defines itself. Right. And that's another factor that's a massive difference between, the legacy way and this new way is you can actually see success trends before the company's even off the ground, just based on the support that the target market has for these ideas. You have a truly vested interest in its success, and there's no product yet for the most part, but you want to own a piece of it. Like, what better market validation is there?
That's extremely valuable. That's incredible, man. What kind of deals could people listening? Let's say they've got somewhere between $100 and $1,000, and they're interested in investing in a startup that they find on your app that they really believe in. What are some of the sorts of deals they could expect to find? I mean, I would imagine that it really just varies from startup to startup. What the deal is, or is there sort of a set kind of deal, or what are some of the most common ones? For investing newbies, including myself out there, what can people expect there?
Well, at any given time, there's about 400 active deals, and pretty much anything that you're excited about. Well, maybe not anything, right? There's a lot of things in this world. There's a lot of cliche ones like breweries and software as a service companies are doing well. I'm pulling up a few here. Solar companies. Actually a couple of them. There's been like Facebook alternatives, people that want more privacy, and so one guy came out was trying to raise I think $100,000 for a Facebook alternative called Minds. I think they've raised $2 million so far, and they already have like 300,000 users on this alternative Facebook.
What?
I thought that would never work.
Seriously?
I'll be honest. I said that's the worst idea I've ever heard. And I'm usually pretty good at that, but this time I was completely proven wrong. And again, that's what I love about it. It lets the market decide what they want. When Kickstarter's similar model, but you don't get any equity, right? You get the product. When it first launched, VR was reborn just because of the crowd. It's a really interesting thing, right? VR bombed back in, when I was growing up. It was terrible. It was kind of fun, but people put millions of dollars in this thing and it just didn't work. In fact, it hasn't even changed that much, but now everybody wants it, which is interesting. But VC said we'd never touch VR again. That's a technology. But when this younger generation saw this thing on Kickstarter called Oculus Rift, they said, we have to have that, right? And so they raised a tremendous amount of money, get that thing off the ground, and then, of course, it was acquired for $4 billion by Facebook. That's the market demand itself saying, we know what we want, or at least we think we know what we want. And the difference, again, is VC has to roll the dice and hope they know what the market wants. And they try to tell people what they should want or what they think they try to understand what people actually want. But there's no better, again, validation than the market itself telling you.
So, and now in terms of how these deals might be structured, like if I were to put in $1,000 to a certain company tomorrow or today, what could I expect to get out of that? Or is it just very deal per deal?
Yeah, every deal has its own terms, and so there's one called Utopian Shift. When you put the money in, they want to do a 30x royalty. So they basically pay you put $1,000, then you're going to get $30,000 out over a few years, or they're basically pay you back based on their profitability. But once they pay you back, then they're free and clear as the owners of that organization. So that's one investment you could have made there, which was a very creative one. You don't see that often, by the way. Other ones are you get a small stake in the company based on what they were offering, and then you're kind of in this moment of sit and wait, right? So because it's private equity, liquidity or the ability to sell and get out of it is a lot harder than, say, owning a stock. And that's why you don't want to put in all your cash flow. You just want to take little pieces. But you can get, certain stake. Well, the idea is to get to an exit or a buyout or find somebody else in the market that would actually want to take those shares off you, because you can legally sell them to anybody you'd like, and you just have to find that buyer. And so that's where the power of Newchip is as we grow as a marketplace, we can actually be that auction house, that real-time place where you can find, where a market can really be created to find buyers and sellers of private equity. There's things like this already. It's already legal, but the hardest thing is finding real volume to get rid of what you want or buy what you want. And that's really the secret power of Newchip and the attraction of how we've raised the capital we have is that, for the first time in my life, I'm researching, how did NASDAQ start and what steps did they take? And what steps should we not follow? Because some of those guys went to jail or at least had some legal trouble.
Right.
But you're thinking about creating a market. Really, you want to create liquidity. You want to create an opportunity to raise capital, and you want to create liquidity for those investors. And equity crowdfunding is, I think it's an unstoppable force that's emerging now. And Newchip is, aiming to be the leader of that space and become the market for buying and trading and selling and raising capital for early stage startups, which I think at the end of the day, it's a long time overdue. I think the system's broken, the law's changed, and we're here to fix things.
Love it, man. I'd be curious to what was that?
I just was laughing because, you're laughing because it seems big, right? It's huge. And it's the funny thing is it seems so simple and obvious now. And that's just been I've watched it and observed it the last 20 years. I've learned that the term venture capital has actually only been around about 40 years, believe it or not. So that's about as long as I've been alive. And so you think these terms and these ways of doing things, I think with innovation, you just assume that that's always how things have been. But venture capital itself is only 40 years old, but it's not perfect, right? And I think it's time for an improvement. The best part about this, though, is that it doesn't go away. We just tee up better startups for those bigger rounds.
Right.
So, we get better quality startups, the ones that pass the test, have their market, they have transaction, they need growth capital, they can reach out for a Series A. VCs have been looking for more deals. And so rather than being competitive, we're actually very cooperative in that way. They want better deals. Nobody else wants to touch these higher risk deals. Except for the majority of Americans like to believe in people and want a taste of some startups. Yeah. So let's do this.
Time for a change. I love it. I would wonder, would you have, because I'm sure a lot of people listening, they're probably interested in doing this, but have not done any investing ever in their lives. And so I would wonder if you would have any just general advice for people on what to look for in something they invest in. And even like I know one sort of general rule of thumb is don't invest any money that you're not okay losing, but I'd wonder what kind of advice you'd have for beginner investors, and of course with the relevant disclaimers and stuff like that. Yeah, the one thing I can never do, and I never will do, is say you should absolutely invest in this, and this is how you should do it. Right? There's legal implications to that. So, if you're ever wondering, like, why is this guy being kind of wishy-washy? There's probably some legal stuff in there. In my case, I think the best strategy, or the strategy that I like to use, is be sure to diversify. Right? If let's say you definitely
only carve off 10% of whatever you've got. It's maybe you've got $1,000 lined up. Take $100, right? Some deals you can even get in for $10, but those are hard to find. So the main thing is you need about $100. But let's say you can take the $100 and just roll the dice or find something you believe in. You can go discover new companies. You can use all kinds of trends on Newchip, right? If you want to, the best part is that if you put the $100 in a company and it doesn't reach its goal, everybody gets their money back, right? The deal doesn't go through. So it works a lot like Kickstarter. So you take very little risk, but you can say, okay, this company is growing fast. I've reviewed it. There's a lot of people saying great things about it. I'm going to put my $100 on this drone company. Or this new innovative light technology, or a solar company. But find what you're looking for. Is it a cause? Do they have good values? Do you believe in the team? Find something that really makes sense. Is it a brewery around the corner, right? I've actually put money into quite a few Austin companies here in my backyard. One, to support them. Two, because when I go there, I want to be on their list of investors to say, yeah, I'm part of that club, right? If I spend my money on a few beers or dinner, or if I'm doing an event and I want to throw a party, I want to go to those places and I want to say, hey, I'm an investor. I actually get paid indirectly by partaking in their service.
That's very cool.
Very interesting concept, right? But go find what you're looking for. Put $100 in. Don't put all your money in, because you're not going to get it back right away. It's going to be challenging. This is about growth. You want to put $100 in and turn it into $10,000. That's a good way to find a vehicle for doing that. It's also a good way to lose it all too. Yeah. But I will tell you that the success rate compared to any other type of early stage startup for versus a crowdfunded is crowdfunding. That support, the thing that companies don't get $1 unless they get all the money, gives them a tremendous amount of out of the gate power. If you have the capital to get started from scratch versus spending the capital to continue raising, excuse me, you're not wasting money. You're not wasting that first check on continuing to raise, right? The challenge with that first check in the legacy model is that you're trying to raise $1 million. So you finally get somebody to write you a $20,000 check. The chance of them seeing their money back is almost zero, because you're trying to raise $1 million. All you have is 20 right now. Where's that money going? It's going to go to plane tickets and trying to raise the rest of the round. The chances of you finishing that round on 20 grand is pretty small.
Right.
With crowdfunding, trying to raise $1 million, you have to get $1 million or you don't get a single dollar. And if you do hit your money, or you do hit the goal, you get all of it at once, and then you just go execute. You don't have to worry about raising more capital. You just have to worry about executing. In addition, you bring along a lot of brand ambassadors, all these people that want to buy your product that are actually investors in your company. You might have 2,000 people that are sharing your new ideas, your press releases, and everything else with their friends. That's a new level of company support that we haven't really seen before.
Right. Well, that's all awesome stuff, Travis, and we're getting close to the end of our time here. But before I let you go, I would actually like to just talk about your past just for a second, and I'd love you to share what you would consider to be your worst entrepreneurial moment to date, because I know that you've done a lot, obviously.
So many.
And there's probably quite a few, but there's always good stories there and interesting lessons learned. And so what is that story for you, your worst entrepreneurial moment, and maybe what you learned from that?
It's so tough. I guess I'd first say I'd have to say it's easy to paint a rosy picture over 20 years. So you've got a lot of really cool stories to tell, but if I told all my bad stories, it would be 90% of my experience. It's hard and it's a hustle. I had my first son. I was 21, and my wife, my girlfriend at the time, was 18, and so the odds were stacked against us right away. Right, I was 20, and I wasn't even allowed to drink in a bar, and I've got my first child, and the dot-com boom starting, and all this crazy stuff, and trying to figure out my life, and really that's been a foundation. So I've been lucky to have a real responsibility and kind of a debt to that cause. You remember, I didn't have a lot of money growing up, and I didn't have any support for the most part. And then I had this new responsibility, so I had to make it work. I didn't have a choice, and that drive really was cemented in. But it's also, it's also been hard. The whole way has been hard. Even to this day, there's a tremendous amount of burden there that I would just share. The biggest mistake, I think, entrepreneur, I think it probably comes down to partners and partnerships. I am definitely the guy behind the curtain, if you want to play Wizard of Oz. I'm definitely not the face of a company for the most part. I'm not the guy that's going to go close the round. I'm the guy that, can back up somebody who's closing a round. They could say, oh, that sounds crazy. And they can say, well, I've done it. And they go, oh, okay, cool. So I'm a good second fiddle, if you will. But there's been several times where I trusted somebody so much so that, I shut down a $500,000 a year company to go all in with somebody for free for a long time and end up getting completely shafted after 4 years of my life. And that was what I thought was a partnership, and it really was just a ruse, but pretty disappointing. A lot of my challenges have been in those partners. I would say, a second partnership, I went all in with a friend. We're both very smart, but I realized after we started the deal that I'm trying to do, $60,000 an hour, and he would have been happy with like $60,000 a year, and we just weren't on the same page of success. So you have to be really careful. But I also deeply believe that you can't succeed on your own, and there's no island here. I think you have to be successful on your own, but you also need a whole team and really partners to make those things happen.
Yeah, absolutely. I mean, I'm right with you. I've had business partners for the last 4 years now, and are actually going on 5 years now, and I can't tell you the importance of how important it is to put things in writing and come up with some very clear agreements before you enter into some businesses, because it's almost been the end of the relationship in many cases, and fortunately that hasn't actually happened. But I'd completely agree. A partnership can be a very, very valuable thing. It is rare to find that combination, though, and where you work well together and are kind of on the same page as far as the vision and the relationship goes. But and once you do find that, to just get things in writing and be very clear.
Get it in writing. No matter how good things seem, right? No matter how good things seem, you can still get completely shafted.
Yeah, it's amazing once money especially gets involved.
Yeah, it's strange. It's strange. I would say on the bright side, I'd say the hustle pays off the more you do it. And I think like on a more positive note in itself is really really challenging assumptions. If somebody tells you something, if you believe something, because what I've found at 40 and being in business and all kinds of crazy opportunities is that you can really create the rules yourself as you go, right? How would I get in touch with the founder of a Fortune 50 company? Well, you just walk up to them, right? You don't have to go through their guys, and you don't have to go through a system. Break the rules, because there really aren't any. And people look at me like I'm crazy sometimes. I'll just, go walk up to people, or I'll go behind the curtain at an event and just go to the green room and talk to people, just because I'm comfortable doing that, because I've experienced it before, right? But people think that's completely insane. And I would just say, keep your mind open, because you really set the limits for yourself on just about everything you do.
I hear you, man. I mean, what you're saying is reality is negotiable, and it's clear you've definitely taken that to heart and have lived that based on where you are now. And so that's a very valuable message to share with anybody listening. And that's kind of honestly, you could say it's the entire premise of Successful Dropout. Is it's one of the biggest mistakes I believe you can make is not questioning the norms of your time or the society you're in. If you can be the person that questions those norms and kind of steps out in boldness, that's typically going to put you ahead of most people. And in in the moment, like you said, people can look at you like you're crazy, but in hindsight, people will look at you as the leader and you as the brilliant one that had the courage to step out and the real mover and the shaker. When you
you take the risk of looking really foolish sometimes, because not every time you're not right every time, and sometimes you do get kicked out, or people do put you on the bad list. But for the most part, that's the only way to cut through the noise, and there's not enough time in a life to just wait around for the opportunity to just open up. You've got to go find it yourself.
Yep. Well, that seems to be, Travis, what's in the very DNA of Newchip. You guys are questioning the status quo and the norms and really bringing on a new wave of innovation in the space. And it's exciting to see. I'm super stoked to see all the success and where it's going to continue to head, and really excited for our listeners to get involved as well. How can people get a hold of you?
Right. So Newchip's live on the iOS App Store right now. It's been online for several months now. We're full production. We're working on our web experience and our Android as well. You can find me on Twitter. My Twitter account's TEQ, and you can find us on Facebook. Just pull up Newchip on Facebook, Instagram, all that good stuff. But you're going to mostly find that experience on the app itself. Feel free to reach out to me on LinkedIn if you think I can help you in any way. I'd be glad to guide anybody out there that's struggling as an entrepreneur. It's kind of my DNA to want to help everybody out there. My only request is that don't bug me with something that you expect me to put more work in on something that more work than you did on that question. That's my only stipulation.
That's good. Awesome, man. Well, Successful Dropouts, you are the average of the 5 people you hang around the most. And today you've been hanging out with Travis and Kylan, learning what it takes to drop out, grind, and succeed. For everything we talked about today, as always, head over to successfuldropout.com and type Travis into the search bar, and the show notes will pop right up. And as always, stay hungry, stay foolish.